Hi guys, hope you're doing well. I'm just going to quickly give you an introduction again, alright? So my name is HTrade, so I'm one of the partner traders of Wesley Trades HQ Discord. Now let me quickly give you an introduction on where I got started. So for a while now, I would say for about a year, 2 years plus minus, I have been trading on and off different strategies, etc., etc., until I came across Wesley Trades. Now, I came across Wesley Trades from when I actually, well, on YouTube, right? So I came to Wesley Trades. I basically just was doing my normal thing, looking at videos about trading and strategy, etc. And then this guy pops up. Now, this is even before he got 1,200 subscribers, right? So I think it was about 3 months ago, etc. Any case, so I just subscribed because I looked at all the videos and I just saw how much fun he, together with his Discord group, is having. And that is the type of trading community I wanted to associate myself with. So at the end of the day, I joined Wesley Trades and I eventually became a partner trader in Wesley Trades. So what I do now is I document all my trades inside the journal section of the Discord, and I've been getting good results. Like in my video that I posted last week, in my introduction video with a lot of random AI stock videos. It's basically my journey, right? So I'm starting with a 50,000 prop firm account, eval prop firm account, and I just made trade after trade. I started winning trade after trade, stopping at my loss, etc. And you'll see here all the trades that I did, very good trades. And from the 18th up until the 21st of November, these are my results. I'm literally halfway in passing the account. And here's my stats: 70% winning trades, losing trades, 30%, the amount of trades that I did, the amount of contracts that I took, etc., etc. Right? So here's all my results. Now I'm going to quickly go through all these trades with you that I took, but I'm also going to explain to you, this is basically my journey that I'm going to take you guys on, because this is me. I'm a normal guy, right? I don't have a fancy job. I just have a very basic job, very basic salary, and at the end of the day I want to do better for myself. And since I work from home, it's much easier for me to do so, to get started into trading. And yeah, let's just get started, right? So let me quickly show you, let's say from the 18th of November, right? Let's see, Tuesday. So what happened on Tuesday? Oh yeah, I also trade NQ, which is NAS 100 in Forex terms. NQ futures. So I have a futures account with Funded Next, but you can literally go with any company with when it comes to prop firms. Now, I would suggest you guys to go and join Wesley Trades. So I'm going to leave the link in the description. of this video, and I'm going to direct you guys, just when you join the Discord, have a look under announcements, giveaways, discount codes. We currently have a 25% off special on discount codes if you join Alpha Futures. So we are associated with Alpha Futures, or Wes. Wes is the boss of Wesley Trades HQ, and this is what we're currently running. So 25% off on all Alpha Futures accounts. You just need to use the discount code, all caps, Wesley Trades. One word. So I'll also leave that in the description and also on the video itself. All right, so let's get back to the trades, right? So when we go to the trades, let's have a look on Tuesday. So I always trade New York Open. So what time is New York Open? New York Open is 9:30 EST. 9:30 EST, or at this point in time, UTC -5, right? Now, before daylight savings, it was UTC -4, and now after daylight savings done, it's now UTC -5. So it's basically 1 hour later for the rest of the world. Yeah, in any case, let's move forward. So Tuesday, let's go to that trade, and I'll give you my reasoning behind that. Why did I take this sell? So number one, at that point in time, the 15 minutes time frame was bearish, and what I did was I took out my fib tool and I draw the fib tool from the London session high to the London session low. I waited for price to react off this level here, this liquidity level here. I'll give you guys more insight into my strategy as time goes by, right? So let me just show you the trades. So I went on the 1 minute. I entered that trade after I saw, let me just quickly go back here. Always have to scroll back, always, all time. Any case. So my initial trade went out at break even. Well, no, that wasn't Thursday. Let me just quickly go back again. So Tuesday. This is a very nice trade. So what happened was, I'm now on the 1 minute time frame, right? So what happened was the following. Market open. Generated a lot of volume. You see these bubbles are basically an indication of a lot of volume inside that candle, a lot of orders inside that candle. So I have an indicator that basically measures the amount of volume that's being printed per candle, and if it goes above a certain amount, it highlights that candle for me, and it also does give you the amount on that sometimes. So it's a little bit buggy. It doesn't show you always the amount, but it does most of the time. In any case, a red dot means a lot of volume. Okay, right, so candle up, candle down, candle up, candle down. It made a fair value gap. Now, since I was looking for a sell, I waited for an inverted fair value gap. And literally, the next candle that went down, it basically, it didn't close that fair value gap exactly to the point, but I waited for the next candle. So basically, then we had a reaction of that inverted fair value gap, and literally the 50% mark. We call it CE. Reaction of the 50%, or at least the 50% mark of that fair value gap, and we closed bearish, and that's where I entered my trade. My stop loss was at the previous candle's high, which is right there. And I took a 1 to 2 risk to reward. And as you can see, it played out beautifully. Yes, it came a little bit into my stop loss and then started reacting of it, but it did luckily not close above this inverted fair value gap, nor it basically respected this new bearish fair value gap. It didn't close above it. When it closes above it, then that's a sign for that the price might continue going upwards. Any case, and that's how I won this trade. And let's go back to that 20. Basically, let me show you how my results looked at after that trade. You see, there's exactly when I started doing the trade. That's where I ended the trade. And this was my results after the trade. Very nice trade. Now let's get on to the next day, which is the 18th. The 18th, there was a trade. I had a loss there. But let me just quickly show you that trade. So let's just go back. Let's just go move forward. So when it came to New York Open, I had my Fibonacci tool out on the higher time frame, right? Let me show you what I mean, right? So I just wish I can show you this on the side. Let me do that. Let me quickly do that. I'll show you a higher time from this side, and I'll show you the entries here on this side. All right. Okay. Let me show you this on the 4-hour time frame. I think that's going to work. Yes. There's a lot of markings out here, so just don't be worried. All right. So here, there we go. All right. So what happened here was I have drawn my fib tool out from this high to this low. No, I'm sorry. From that high to this low. There we go. And what do you see? On the left-hand side, let me show you. So it's basically, I was waiting for a Fibonacci retracement on the 50% level or the 61.8. And would you look at that? Where did it react from? 61.8. Exactly. Now tell me, doesn't this look beautiful? Right? Why from the 61.8% fib level? Why? It's because there are institutions out there, bigger institutions, much bigger than you and me, much bigger than any retail trader out there, that use the Fibonacci tool and these levels. 50%, 61.8%, and the 75. The 75 is just for if you see a candle close above the 75%, then you know price might actually start turning in the opposite direction of the current trend that you are looking at. I'm not saying that whatever trend you are looking at is what the market is actually doing, but I mean, you need to have your own way of looking at how you are going to determine your way, your bias, your direction, right? So directional bias is just a fancy word of saying trend. That's it. That's literally it. All right, so we had market open on Wednesday. Yes, I did look at this fair value gap, but I didn't want to buy. The reason why I didn't want to buy was because the higher time frame was bearish. The daily time frame was bearish, the weekly was bearish, the 4-hour direction was bearish, and all we had that was not bearish yet at that point in time was the 15-minute time frame. So eventually, price went up, and usually we get a good reaction of the 4-hour inverted fair value gaps. These are very good confluences that I make use of personally to see if price is going to change direction. And so basically, daily fair value gaps, daily inverted fair value gaps, 4-hour fair value gaps, 4-hour inverted fair value gaps. An inverted fair value gap is an indication of the trend changing, and price respecting normal fair value gaps is, it basically tells you that the trend is going to continue in the current direction. But on this day, I was very stupid. I did not wait for my entry model correctly. I just waited for one singular bearish candle bouncing off a 4-hour inverted fair value gap, and I decided, okay, cool, let me go sell here. I'm going to put my stop loss above this fair value gap. And yes, price did go into that direction initially, and then it stopped me out. Why? Because I'm an idiot. Because I didn't wait for my entry model. What's now? Now I'm going to ask you. I'm going to now you're going to basically ask, what's my entry model, right? So officially, my entry model is when price reacts from an inverted. So if I look for, like this is a reversal trade, right? Clearly this is going to be a reversal trade. So when I look for an reversal trade, I'm going to look for a reaction of an inverted fair value gap, and to see that price respects that inverted fair value gap. So here we can clearly see price closing below this fair value gap, but it did not close below this area, this turning point right here. It didn't close here just yet. So here it did, right? So what then? I could have waited for price reversing, tapping this fair value gap again, and then make an engulfing sell candle, and then I'll enter off that engulfing sell candle for a trade. Or I could have simply waited for price to have another reaction of a different inverted fair value gap, like this one. Here we closed below that inverted fair value gap. Had the reaction of it. Actually, we closed above it, and then price started going down after that. So this was my mistake. I paid for it. As you can see, there's my loss, right? And that was my results after that trade, after that day. And then I said to myself, since I've already risked the maximum amount of risk for that day, I'm done. All right. So let's move on to the 19th. All right. No, that was the 19th. Yeah, that was the 19th. That's where you see clearly where I explained why I wanted to sell that day instead of buy. Now here is the 20th. All right, so this was the first trade that I took. So let's go on to the 20th. This is going to be the last one I'm going to show you guys, and then I'm going to show you my results after that. So here we go. All right, so what did I do on the 20th? All right, so initially I took a quick buy, and I took profit at this high, right? So I think I took about $300 plus minus, right? And then after that, I was initially looking for a sell, actually, because there was a very big, very, very big higher time frame confluence above us, and it respected the fib level of that higher time frame confluence. So what is that confluence? Let's have a look. 20th, right? 20th. Here we are. So what were we bouncing off? You see there's a daily inverted fair value gap, and there's a daily fair value gap. And what else? There's a weekly inverted fair value gap. How big of a higher time frame confluence do you actually need to understand that there's a very big possibility that price might have a negative, or well, a sell reaction of these confluences. That's why I have this as my bias stapled across all my charts. My bias is derived from the weekly, the daily, and the 4-hour confluences together with the 15-minute direction. Sometimes when I take a reversal trade, then the 15-minute time frame may not be with that flow, that order flow just yet. That's why I go down to the 1 minute, and when I see a very big amount of volume, very big moves coming from the 1 minute time frame, then I look for a sell. Like here, I sold prematurely. So what I did was I bought, took a little bit of money, right? And then I sold, and then I got stopped out at the stop loss. So basically whatever I made is given back to the market. And then after that, I thought to myself, listen, there's still a very big move coming. So what do I need to do? I still have the amount of risk that I can risk for this trade for the day. So what did I do? I clearly waited for price to tap this higher time frame confluence, and then we made an inverted fair value gap, and then we made another inverted fair value gap. The moment that I saw this, I was in for a sell, a very big one. Put my stop loss here. Since there's a lot of volume, you have to put your stop loss at a more appropriate level. It doesn't help you put your stop loss here if price just went up, whipped you out, and went for that direction, or whatever the case may be. You're basically done. So you have to put your stop loss at a more appropriate level. And that is exactly what I did. And I took a beautiful trade. So beautiful that it basically gave me a 1,000 or more than that. I can't remember. I can't really. But yeah, any case, here's my results. Here's my, yeah, basically, there we go. Take a look at that. How beautiful is that? You see these confluences? All right, great. So now, and then I ended with this at Thursday. And then the last trade, obviously, on Friday. Initially in the morning, I took a very quick sell during the London time frame following the 15-minute direction, because everything was still bearish. So when the moment that 15-minute got bearish, reacted off a 15-minute inverted fair value gap and fair value gap combination, I took a sell after I got that. See, CE tapped CE off this, well, almost tapped CE off this fair value gap. I got my engulfing candle, I took my sell, and I went out at 400 USD. Boom, I closed there. And I was very lucky, because if I didn't close there, okay, so here's my profits. If I didn't close there, what happened? You see that big reaction there? Bigger institutions stepping in now. They want to buy to go somewhere else. And this was on my personal account, my small personal account. And at the end of the day, I waited till much later for price to react from another higher time frame confluence, and I took a little bit. Oh, I took an extra sell from. Let me just go to that day, right? So let me just share you share what happened. So here was my initial sell during London. Took my trade, and then that Friday I just waited and waited and waited. There was actually a very good sell that came from this area. There we go. Here. So we basically took the London session high just there. Just that liquidity take is all that was needed. Price had a reaction. We made an inverted fair value gap plus fair value gap combination on the 1 minute time frame. We tapped CE. We had a reaction of it. We could have sold here and we could have made quite a bit of money on that sell. Literally, if you literally just took this all from here or from here, no, from that candle there, right? And you take your stop loss at the candle of that effigy that created that effigy, and you aim for 1 to 2, you would have had 1 to 2 easily. Or if you have aimed for 1 to 1.5 and took your stop loss a little bit higher, you would have easily had your 1.5 risk to reward trade there, just like that. Or if you entered from here when it tapped the CE of that fair value gap again, if you entered, if you wanted to enter a little bit later on, you could have, and you would have also made your money. So that was a beautiful trade that I missed. And in any case, so I waited for the evening and I took myself from this location. There. Here. I took myself from here. Around this area. I took myself. And I took my profit here, I think. So, yeah, there we go. You see this area. 1 minute time frame. 12:55. Let's go to 12:55. Oh, that was much earlier. All right. Oh yeah, there we go. This was the one. Yeah, there we go. Another beautiful CE trade. Why did we take this one instead of this one or this one, etc., etc.? Because you need to have a clear reaction of the fair value gap and print a bearish candle afterwards to tell you that we are going in that direction. You do not blindly enter a trade if you do not see your proper entry model. If you don't see that candle that bounces off from that fair value gap. That is exactly what I saw. And the reason why I took this area specifically is because price was going up in a lower time frame bullish trend, right? And what happened here? We broke and closed below that bullish trend, created a lower low, reacted from that fair value gap, and we sold. And that's basically what happened. Why did we sell? Let me ask you, why did we sell? Or do you see this area here on the left-hand side? What are we tapping right now? We are on the 4-hour time frame. We are tapping a massive. You see that? You see this here? We are tapping a massive 4-hour fair value gap. That's why price started reacting from this. That's why this sell was beautiful. Very beautiful. Any case, I'm going to stop myself now. I'm going to show you my results one last time. And I'm going to tell you we are halfway to close this account. Or not closed, but to halfway to pass this evaluation. So yeah, these are all my results, guys. So as you can clearly see, at the end of the day, you just have to be patient to what you want to trade. If you want to trade, you just have to be patient. And also, what you need to do is when you take a loss, like I did on the, was it on the 20th or the 19th? I think it was on the 19th. Yes. If you take a loss with your full risk that you set yourself out for that day, you must take your loss like a man and move on with your day. You have to close your charts if you have to do that. This is not a game. This is not a game where you lose your life and then you go back to the previous checkpoint or the next the previous starting point, etc. This is not a game. This is real money that you put in to open a prop firm trading account. And what you need to do to be able to pass that account is you need to set yourself a set of rules, and you need to follow those rules to the letter, because No one else is going to do this for you. Only you have the power to click those buttons, to start the trade, to stop the trade, set your stop loss, set your take profit. And you are the only guy that's going to move this level or move this level at the end of the day. You are the only person responsible for doing this. So when you break your rules at the end of the day, then that's on to you. That's on you. So yeah, that's what I'm saying, guys. Just be patient. Just be responsible. Just be responsible. I mean, you're not a child. No one else is going to tell you that if you put your hand in the cookie jar and you broke the whole jar for whatever reason, whose fault is that? There's no mother or father that's going to scold you at the end of the day when you did some stupid shit. So you understand what I'm saying, right? So you, at the end of the day, you need to be responsible to handle your own mistakes or handle your own strategy at the end of the day. And with patience and with this, following the strategy, you will eventually form an edge that would, like this, for these reversal cells, those beautiful reversal cells that I took, you will be able to create an edge in the market, basically with confidence at the end of the day. So yeah. All right, I'm gonna stop myself here, and yeah, this is it for this video, guys. Hope you enjoy watching this as well as I tried my best to explain all my trades. And yeah, let's move forward and let's try to pass this account as best as we possibly could. Hope you have a good one. All right, before I go, actually, like I mentioned to you guys, I am a partner trader of Wesley Trades HQ. I'm going to send you guys the YouTube link for Wesley Trades, as well as the Discord link, as well as the discount codes, the link for the discount codes, etc., in this video or in the description of this video. So have a look there, come and join us, join the fun, seriously, because we may be a small trading community, but we are a good trading community. There's no hackers, there's no people that makes things sour for other people. We're literally just people that have fun and we help each other out. It's a very talkative community. So if you have any troubles whatsoever, come join us in the Discord. And also, we have live trading sessions every single week. We have 3 to 4 to 5 trading sessions every single week. Let me show you guys. So our trading sessions go into let me just quickly do, oh, this Wesley Trades stream. So it's a stream that we run every single morning. I'm the guy that does the announcements. So let me show you. 9:15 a.m. EST. Just 15 minutes before market open. That's where we usually start our when Wes start the live stream, and we have a steadfast education for the strategy that I'm trading, and the same strategy that Wes is trading as well. So yeah, we have everything that you need basically to get started. So, and it's free of charge. It's completely free of charge, guys. So come and join the fun. Anyways, hope you have a great day, guys, and yeah, I'll see you in the next one. Cheers.